This is the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Any postings and or social media content are the views of the advisor and do not necessarily reflect BMO's position or viewpoint. The information herein is for Canadian residents only and does not constitute any financial, legal, tax, investment, or other advice. The Wealth Roundup for the week of May 21st with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Nice to see you again this week, Patrick.
Great seeing you, Terry.
It's been a very interesting week. I know for a fact that inflation is down from March to April. The markets seem to have been settling down a bit as far as an anxiety point of view is concerned. What's going on with them this week?
So, a couple things there. Great that you highlighted. The inflation number did come in lower than expected, 1.7 for April. A little bit to unpack there. We continue to see weakening in energy prices, largely due to supply going up. But we also saw the end of the consumer carbon tax, and that also would have created more savings for households, bringing prices down. Some progress on a U.S.-China trade deal. So we don't know the exact details of it yet, but some of that heightened anxiety about where that trade relationship could go have certainly calmed the markets. So this would be the fifth week in a row that US and Canadian stocks have been positive, which is quite remarkable, like you said, off of that fear that the markets went through in early April. So I think we should start to kind of lower our expectations a little bit in terms of having week after week of positive equity markets, because this has been quite a run, and we are eventually going to start to approach some of those market highs that we saw earlier in the year, and we're gonna have to start to see some real current data under the new situation factoring into these prices. Last week, Walmart and the president having a bit of a social media feud. When Walmart was telling their customers, be prepared. We're going to have to start now increasing prices. We've kind of gone through the inventory that we had, and the president coming out basically telling Walmart to eat it and saying, you know what, you guys should lower your profits. And so that'll be really interesting to see how that plays out.
It's really interesting to hear words like that from the president too, considering the business acumen that he's had in the past, telling a company to eat any increase in prices. Kind of raises your eyebrows. What new investment products have popped up that investors might consider at this time?
Yeah, so my industry is never shy about launching new products, but I think just to kind of very generally speaking, when we see a new product launch or when we see more inflows into a certain product, it's usually because either investors or their advisors, people like me, we're trying to enhance a certain characteristic for a household. And that might be trying to find more income because clients are approaching retirement. That might be trying to grow their assets and defer more tax because they're still working and perhaps they've exhausted all of their tax sheltering accounts like tax-free savings accounts and RSPs. But also what I think has become really popular is private equity and alternative investments, not necessarily because clients or advisors are looking to find a way to build a better mousetrap and get more returns, but they are trying to deal with things like excessive volatility, which the markets have had lots of in the last 10 years. And we don't think that volatility is going away. And the interesting thing about private equity and alternative investments is that to a lot of clients, they would be like a foreign language. The terminology, the characteristics, the liquidity, the underlying investment structure, quite complicated. But we don't have to look too far to see really good evidence that this is a significant change in the way that people invest. For example, the Canada Pension Plan, which up until the early 90s was very conservatively invested, primarily just in bonds. And then as the average life expectancy for Canadians started to increase, the plan administrators said, we got to find ways to grow these assets more. We had lots of volatility and things like the financial crisis. So currently, the Canada Pension Plan has approximately $650 billion of assets under management. About 20% of that investment pool is in private investments. The goal there is to find investment characteristics, so kind of enhancing these investment characteristics of less volatility, more income, and perhaps higher growth. And liquid alternatives in private equity are now starting to come to retail investors. These used to be only things that institutions could invest in or very, very wealthy households. And now this is something that, again, with the advice of their professional, such as myself, this is something that investors can kind of add to their golf bag. I think of my son's, who's 9 years old, his golf bag used to only include 3 clubs. And probably if you're to look in your golf bag or my golf bag right now, we probably have 2 or 3 wedges. And so as your kind of investment needs kind of get more sophisticated, these are basically new clubs you can add to your bag.
Okay, and if people want more information too on the CPP, if they go back to last week's podcast, Markets, Rates, and CPP, you had some advice on when and when not to start to draw on your Canada pension plan as well. So that's a good callback to that. The May long weekend has come and gone. Is this annually kind of a tipping point part of the year? Is there something that households should or could be thinking about as the summer approaches with investment?
Yeah. So I always think of the May long weekend for my family. We used to go out to a really simple cottage that my grandfather built out by Caroline, Alberta. And I think this is something that's common for a lot of Canadians is you head out to the cottage and you clean it out. You find out what damage the mice and squirrels have done over the winter. But on a grander scale, when we kind of think in say for households and wealth management, is that we are seeing Canadians and snowbirds starting to look at things like vacation property in perhaps a different way. I don't think I would be saying something that is new news by saying that Canadians are getting a little bit nervous about, say, their properties that they have in the US. And so kind of coming back home, and here in Alberta, we see definitely people looking, in terms of if they would like to have a retirement vacation property in their household, is that maybe it's not Florida or Arizona. Maybe it is somewhere else in Alberta, maybe in the mountains, maybe in BC, Eastern Canada, Southern Ontario, East Coast has always been really popular. And then we're seeing some snowbirds that were maybe planning on eventually selling their places in the United States are accelerating those plans. So we have questions on terms of, what to do with currency. This is something even when it comes to vacations and planning vacations for next year's. Should I be buying US dollars? If I'm coming into a lot of US dollars because I'm selling my US property, what do we expect to happen with currency? So the current view from BMO Economics is that we expect the US dollar to generally weaken versus a basket of global currencies. And so this is something to kind of keep in mind as we kind of think about vacation properties and future vacations, and something that's topical as we kind of finish off the May long weekend, but start to make our plans for the summer.
So it might be worthwhile getting a little more bang for your buck, reinvesting into a property in Canada if that's the direction that somebody wants to go.
I would agree.
Very good. The Wealth Roundup for the week of May 21st with Patrick Leonard, the Leonard Wealth Advisory Group of BMO Nesbitt Burns. Thank you, Patrick. We'll talk to you again next week.
Have a great week, Terry.
This has been the Wealth Roundup with Patrick Leonard from the Leonard Wealth Advisory Group of BMO Nesbitt Burns. I'm Terry Evans. The Wealth Roundup is part of the Reluctantly Podcast Network.